most reliable macro indicator in Bitcoin history just gave a signal. I bet you want to know what it is. Hey guys, it's Keith Allen, and gosh man, what a day. Just running through things. Hopefully everything's working right. Please let me know if you're having any audio issues, because I had a few on my end. So, gosh, what's going on here, right? Big, huge dips last week. A lot of people just got destroyed, and now we're seeing price recover, at least for now. We're seeing price recover up to 88,403 after dipping down to 80,500 just a few days ago, right? So what does this mean, and what is this indicator that I'm talking about? Well, I'm willing to bet that you have no idea what the indicator is that I'm talking about, but I'm damn sure you want to know what it's telling us. So we're going to get into that and a whole lot more. The market's certainly on edge here, looking for any glimmer of clarity to really give us a good sense of what direction is going to be. Because of that, I'm expecting knee-jerk reactions to news and any economic data that's going to come out here. I think all that's going to amplify volatility. So before we climb in, just a couple of things. Live chat open as always. If you're new to the stream, my name is Keith Allen. And I am a full-time trader. I am a work-from-home dad, and I am co-founder of Material Indicators. And so I got things ringing on all sides, and the first note coming in. Bobby, do I have music going? Can't hear a thing. No music. Well, I don't hear it either, so it's not playing. But Bobby, hopefully you can hear me. Can you hear me okay, Bobby? So let's just continue here, and hopefully, yep. Hey, Bryce, hopefully you guys can hear me okay. Yeah, there's no music playing now, but hopefully you guys can hear me okay. Please let me know if you are having any issues with that. So a couple things I want to tell you guys about before we get into the good stuff is, Bobby says, yes, he can hear me. Thanks, great. As most of you probably know, if you've been in the crypto space for any amount of time, this is the very best time to subscribe or renew or upgrade your trading tools because, well, quite frankly, everybody's having a huge sale. And so obviously Material Indicators we're having our Better Than Black Friday sale right now, which is 50% off all annual and multi-year plans. That's huge savings, especially if you want to go onto a plan like Premium Plus, our top tier product. You're going to save over $1,000 on that. So by all means, now is the time. Use well, all the promo codes are actually, you'll get them on the thing. I'll put them in the description so you have those down there. But for the Better Than Black Friday sale, I'll tell you right now, it's BTBFSS 50. It'll be down in the description because I know you won't remember that. Also, a couple of tools that I use that you may want to as well. I use TradingView for all my charting, which you guys are aware of. They're having a huge sale too. I think like 80% off, up to 80% off, plus 1 month free, depending on the plan that you subscribe to. And 3 Commas, where I really manage all of my trades. Really, just a phenomenal platform. If you whether you automate your trades or not, I really like 3 Commas for a lot of reasons. One, they have a great just user interface. I find it really, really helpful. I started using it like years ago in the early days when we had to use 5 or 6 different exchanges to trade the coins that you wanted. So that made it easy to track everything that was going on. And I've just grown very comfortable with it, and lots of powerful tools with 3 Commas, including some backtesting capabilities as well. So check that out. Again, links are in the description. If you use my codes below, yes, I get a little pop from that, but you know what? That's greatly appreciated because I do this for free. Speaking of which, another way you can help me out is by simply smashing some buttons. Hit the like, hit the share, invite some of your friends, any of your trading buddies, or any of the groups that you are engaging with. Invite them into the stream. I would greatly appreciate that. So let's go ahead and climb in to what I'm talking about, right? So the headline was, the most reliable macro indicator in Bitcoin history just gave a signal. And we know the market is on edge here. And, I like social media just is like a waste of time right now to me. It's just, it's insane. what's that? Just a lot of engagement farming more than anything. But I would say this, at this stage, if you're still following narratives, if you're still following hype, or you're speculating on hopium, you are seriously increasing your risk profile and setting yourself up for disaster. You know, we've been surveying subscribers, both past and present subscribers, and material indicators, and the overwhelming majority of them say one of the reasons they joined was to try and improve the risk management. And so I'm going to harp on that a little bit. And if you are doing the things that I just said, you're opening yourself up to unnecessary risk. And, you know, I'm not saying that you can't be successful, but I'm saying long-term, you're likely not going to be. And so I would really encourage you that if that's how you play the game, you're better off cashing in your chips and walking away from the casino. But if you are, instead of focusing on narratives around Michael Saylor or Tom Lee or alt season, focusing on charts, that's where you're going to find the real clues. And that's what we're going to do today. And I will admit, I've never subscribed to the Michael Saylor theory. I mean, I understand what he's doing, but I don't like his treasury play. I like Tom Lee's treasury play better, just in terms of what's behind it, the fundamentals behind it. Obviously, I think at this stage, he's kind of become a hype man. I have a lot of respect for what Tom Lee has done over the years, and so I did follow him into that ETH trade, and obviously that ETH trade is not very good right now. I do have some conviction that it will someday be a profitable trade. Do I have conviction that he will be that ETH will be trading at 7K by the end of the year? That's a resounding no. Hey, maybe it will. Maybe I'll be wrong, but I'm not trading that narrative. And I would encourage you to let go of the narratives and look at the charts. And I shared this with you guys a week or two ago. Like there's some point in time where you have to, no matter how much conviction you have to analyze the data and analyze the charts and be willing to let go of the narratives that you have been clinging on to with both of your white-knuckled fists. Okay. And so I was, for a long time, have said, hey, I don't think the all-time high is in. I think that I don't think that the numbers we're at, 126 and change for Bitcoin and 49.50 for ETH, I don't think those are really where we end. And I do think that these assets will appreciate in price higher than that at some point. When that happens, I'm not real sure. And so for a long-term investor, you still, right, if you have conviction that Bitcoin is going to be higher than that, then that's okay. But if you're trading or you need that money for the holidays or to keep the lights on or to feed your family, then I want you to pay close attention to what we discuss today and clear your mind of the narratives. And let's just look at the charts and what the data say. All right. And so with that, we're going to jump into chart sharing. And I'm going to start with a candle chart, because this is where the action, this is where you can see all the action, baby, all of it in its glory. And so what happened last week, right? This was on Friday. We dipped down to 80.5K. This was nasty, no question about it. And what really bothers me about this level here is that it really did not respect anything in terms of technicals. We shot through, I don't mind an overshoot on the timescapes or even the moving averages, right? And we got that here. And on the weekly time frame, this is where things are a little bit more visible here. So there's both bullishness and bearishness in this particular chart on the weekly. On the daily, it's different. On the monthly, it's different. On the daily, there's some bad things here. Death cross on the 200 and 100 moving averages. That was the last one we had talked about. And you know, this after series of death crosses, right? The green 21, pretty much everything is wound up. All of the moving averages are, all of the key moving averages are completely wound up. The green 21, the red 50, the blue 100, the purple 200 is now on top. Not especially a good thing. Certainly a sign, a very bearish sign on the daily time frame. A little confluence between the 21 and the trend line. That's interesting to see, right? That's going to make this level of technical resistance a bit stronger, in my opinion, here. And that would be at the currently at the 96K range, if we can reclaim that. Before we get there, of course, we have other levels that we need to clear, including this yearly open. But as I said over the weekend, I don't remember if I posted this Friday or over the weekend, there were a few things that needed to happen. And one of them was, to even have a glimmer of hope, was regaining the 21-month moving average, which we did just in time for the weekly close. But quite frankly, it doesn't matter on the weekly close. It's a monthly candle. So what it matters on is the monthly close. So the intra-month volatility really has no bearing. Where we end up on the end of the month is what matters. December 1st, are we opening a new month above this 21-month moving average? So that's what you want to watch. So yes, this is positive that we have reclaimed this for the moment. It did wick down after closing above. It did wick down again briefly, and now we're seeing a nice recovery at the moment on the return. On the weekly, a lot of business here on this weekly time frame. The positives are that the moving averages are not wound up. Green 21, red 50, blue 100, purple 200 down here. Another positive is that this wick that came through the timescapes and wick through the 100-day moving average recovered from the 100-day moving average. Hey, maybe that's it. Maybe, and we have a tentative down here on the A1 trend precognition, A1 algo. We have a tentative long signal, which is indicating that price is not likely to go lower than this 80,500 that it went on Friday during this week. Okay, this is time frame specific. So this week, this indicator is indicating that price isn't going to go lower than that. And I would caution you, with the manipulation that we've had, some of these indicators get invalidated, as happened here. So, I don't even think I have the other algo turned on. Okay, so that's that. A couple of weeks ago, we lost the 50-week moving average. This was bad. We reclaimed it. Actually, now it's 3 weeks ago, we lost it and reclaimed it before the weekly close. That was a positive, but then it broke down. Boom, lost it again. And this time we did not get a close above the 50. So that is one validator, if you will, that bears are in control. But that's not the whole story. Far from it, as a matter of fact. So the rally that we're seeing right now, right? And what's this look like in terms of bid liquidity and order flow? You can see we have some dynamic shifting of liquidity here. And there's a decent amount down below us, right? Not as much as we had a few days ago, but still a significant amount of bid liquidity here. We do have a couple of concentrated levels here, one at this 83 level, and down here again at 75K level. What is significant about those? I will show you what's significant about those. At the 83 level, we had this timescape, this Q2 timescape down at 82.5, right? And so that's defending this support level here. And then at that 75K level, we have something very interesting on the chart. And that is this support level. that was a double bottom back in April of this year. And that's where we bounced and had and created this next leg up from. So I shared with you when we first got the when we first lost the 50 and we got this death cross on the 50-week. And when we lost the 50-week moving average, and that was a death cross on the daily time frame. But when this happened, right, we crossed the 21 and the 200, I think is when that happened. All the times in history that has happened, we have found bottom quite often by finding something like this, right? Like a double bottom like this. So that's in my opinion, a very high probability target when this is all said and done. That would be, of course, if this is not the bottom and this is not the full real recovery. Like, what if this is just a bear market exit rally? Certainly a possibility. In fact, maybe even a high probability in that. So what else could point to that, right? So we're talking about, I just want to look at my notes here and make sure I'm covering everything that I wanted to. We talked about that 21-month simple moving average. And for the moment, we're in a good spot here. Have to be there by the end of the, it doesn't matter if we dip down between now and the end of the month, as long as by the monthly close, we recover this. That would be a sign of bullishness. Losing that 50-week moving average, not good. We know this, right? So this eventually needs to be recovered, but you can't get that until you recover, right? A series of bullish things needs to happen. Got to recover the yearly open, got to recover the trend line, which has confluence with another timescape level, and then one level at a time, right? The 50, then the 21. Only here are we really, boom, back off to a chance at going to back to all-time highs in price discovery. So all of these levels you should be watching very closely. We take them range by range, level by level. So the next one coming into focus is the yearly open at 93.3K. Now I want to show you something, and I've shared this with you guys from time to time. And like the fact that, we have said that 100% of the time that we close below the 50-week moving average, and 100% of the time that we have that death cross between the 21 and the 200-day moving averages, Bitcoin finds its macro bottom. And whether that bottom is, a few more points away, whether we hit it already, or whether we're looking at one of those massive corrections like we've had in prior cycles, remains to be seen. We don't even at this stage, like I said at the beginning of this, we're not talking narratives. So we're going to take the super cycle conversation, the super cycle narrative out of the conversation and strictly look at charts, right? And you see this happening right now, and people are feeling bullish. People are feeling very good, and they're like, oh, I better get back in right now. Before you ape in, let me just show you something that I'm willing to bet you haven't been looking at. This is like my lifetime chart here, right? And I have something marked on this chart that you probably are not that familiar with. And that is something that I monitor on the weekly time frame. And every time it has happened, 100% of the time this has happened in Bitcoin history, this has signaled, really, it's just been a confirmation, a validation of a bear market. And what I'm talking about here is the weekly RSI. And you can see this green line here, which I have set at 41.5. And you can see that every time that we approach it, we're obviously on a dip, but every time we break through it and close the weekly below it, then we see more drawdown. Boom, here it is, right? And then the recovering it is explosive upside. Lost it again here briefly, recovered quickly, lost it again here on the COVID crash. Had a touch down here on this dip, but this dip was not the bottom, and this was not the top. This dip recovered here and took us to a brand new all-time high in 2021. The next time we saw that break down, it happened in 2022. We got a glimpse of it right here. We had some consolidation and then a deep, short recovery, rejection at the key moving averages, and then a bigger breakdown again, taking us from that 40K range all the way down to 15K on the FTX crash. And this was an extended period of time, right? Between April of 2022 until January of 2023, almost a year, until we saw some recovery. So look at what's happening now. Look at where we are. Let me expand this chart. We have broken through and had a close. Weekly close below 41 on the RSI. Now, that is inherently bearish. Here's a glimmer of hope, glimmer of hopium. We see a recovery, attempted recovery, developing here. Does not matter where we are now. What matters is where we end at the weekly close. Before you get a sense of false security, look at this. We can go down further. We could go up higher. We can reject. We could do it again and again and again and again and again until we actually have a recovery. So this is where the recovery lives, in my opinion. It lives here at the weekly RSI between 41 and 42. I straddle it at 41.5. And this is what has occurred 100% of the time. So we had the breakdown, right? We've seen the lows, but are these really, is this really the bottom? Because if it's not, where do we go from here? If it's not, we first go to what I just showed you, in my opinion, is going to be a prime target would be that 70, 74, 75K level that I looked at where we were double bottoming here. And I showed you that on this chart, right? Right here. That's just shy of 75K. We have some bid liquidity there at 75K at the moment. So this is a potential target. And I maintain that if we go down that low, we are awfully close to the 2021 top at 69K. And that is a level that has served as resistance for years and years and years. It took us a very long time to RS flip that level. Consolidation, 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 consolidation for months and months and months. From March of 2024 until election day, the Trump pump took us out. And if you recall any of the streams from back in those days leading up to the election, I said, if Trump wins, the market is going to pump and then ultimately see a breakdown. And if Harris wins, the market's going to tank and then ultimately recover. Well, we're seeing it. Trump won the election. We got the Trump pump. And now we're seeing the degradation of what is happening here with price. Recovery today is great. Fantastic. Take it for what it's worth. But just don't be fooled into thinking that we have confirmed that the bottom is in, because we haven't. And do not subscribe to the narratives at this point. You know, I'm seeing headlines come across my feed that, you know, Eric Trump says this, Eric Trump says that. Don't believe that guy, right? Or anybody else for that matter. Believe the data. And what the data is telling you is that while we are seeing a low time frame recovery at this very moment in time, the macro is telling us that we have multiple bear market validators in play here. And this is one that has for me, since the beginning of my trading journey back in 2017, this is one that has always been consistent. So keep that in mind. And in all fairness, I'm going to give you full transparency where I learned this, because I believe in giving analysts their credit, even though I don't follow the guy anymore. There was a guy when I first started trading named Kirby online. I don't even know if he's still online. I used to listen to him a lot. He had good analysis, and this was something I learned from him. And I put it on my chart back then, and I've kept it here ever since. And it has, as I said, been very, very reliable. Not on the daily time frame, only on the weekly. Okay, only on the weekly. Is this something that you want to watch? I encourage you to put it on your chart. As I encourage these key moving averages, I use the 21, the 50, the 100, and the 200, and I use this on the RSI. Now, in terms of locations, I said that if this doesn't hold and we see a bigger continued breakdown, then that 75K levels could come into play, and if not, then we go down to this level here, which, gosh, I don't want to see that happen for a lot of people, but man, what an opportunity. And does that mean that this has to hold? No, it does not have to hold. Nothing has to hold. Anybody who says that Bitcoin could never go to 50K again, whatever, right? There's no number that that is off the table at this point. Black Swan could take you anywhere. So keep that in mind. And also keep in mind that we have economic data, now delayed economic data, but nonetheless economic data trickling out here through the remainder of the month that the market is looking for clues from. And Fed watchers are looking for clues from. And some of this is delayed. So we're getting September data on some of this stuff that really doesn't have much bearing. But ADP employment will be a current number. That's coming out tomorrow. The PPI numbers from September, like we're in November now. So how's the market going to react to that? I don't know. I think the market is looking for current data, and they're going to there's going to be a knee-jerk reaction to everything they can get a hold of. We have initial jobless claims coming week of so this is from November. This will be current, it looks like. Continuing jobless claims will also be current, so that's good. Last week they gave us a bunch of delayed data, so you can watch these things to see if you can garner some clues out of that. But again, the core PCE, this is going to be from September, so that's not very helpful in my opinion. And of course, the market wants to know, are we going to get a rate cut? And even though that probability may be increasing at this point, it's increased tremendously. We were down in the 30s a few days ago, and now 80% think that we're going to get a quarter point cut in December. If those people are disappointed, if the Fed doesn't do that, the market isn't going to like it. And likewise, if they cut because of an unemployment spike or a fear of recession or a fear of a spike in inflation, that's not going to be met positively either, I would guess. So watching obviously those levels on the chart, watching the order book here to see if these are the areas of concentrated liquidity. This is around that 75K we talked about. This is around that 82, defending that 82.5 that we talked about. So will new bids come in and stack above this and help push price up? Or will it erode, or will it start to stair step down? And those will be additional clues of what's going to happen here with the near-term time frame in terms of price. But as far as the macro is concerned, my eyes are right here on this weekly RSI. And you better believe if we climb back above this level, above this green line here, it's probably going to be a pretty explosive move. That's all I got for you guys. Hope that has been insightful for you. Really, really do. And hope this is helping you trade smarter. So before we wrap, just a reminder, I'll put the promo code for the Black Friday, for the Better Than Black Friday sale in the description for you guys. And everybody is having big sales. 3 commas, Trading View. Click the links in the description on the YouTube channel, and you can get those discounts, and I'll get a little kickback from that. So I appreciate that. Bobby asking what's the green line? What number? The green line is good question. The green line is a number I have on the RSI, and I have it set at 41.5, which if you fit this on your chart, you'll see all the times that we have had very close contact with this level here, and it just 100% of the time, bearish, bear, 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 right now until we recover. I said it. I said the B word. Sorry, guys. It's the way it is. And with that, I'm going to wrap it, guys. I got to go be a dad now, right? Kids are home from school for the holidays. Hope you're having a great holiday week as well, for those of you who celebrate. And don't miss out on the opportunities. Don't miss out on the sales. And if you are so inclined and you're not there yet, join us in the Material Indicators trading community on Telegram. It's phenomenal. We have really, we're talking trading 24/7. No bullshit, no moon boys, no shit, no shilling, no garbage. Link to that is also in the description. It's also at the top of the YouTube channel, the website, and the Material Indicators X page. All right, gonna leave it there, guys. Thanks again for your ongoing support. I appreciate you. Hope this helps you trade smarter.